This conference will now be recorded.
Good afternoon, and welcome to the Clear Lines training session. I'm your host, Kipp Cohen. It is Tuesday, the 28th of May, 2019. This is a twice weekly training session for the subscribers to the Clear Lines indicator running on the Medved Trader platform. This session is also open to those individuals interested in learning more about Clear Lines and the Medved platform. It is a recorded session that will be posted to our YouTube page later today. If you'd like to view any of our prior recordings, you can go to equity-alerts.com. Right here where you see the little YouTube link, just click that. It'll take you to our page. Click on videos and you'll see all of our prior recordings. That was a test video I was doing. That's funny. This is a user-driven session, meaning I'm here for you guys. So if you have a question about the Clear Lines or about the Medved Trader platform, I will be happy to answer those for you. I didn't really have an agenda for today. I kind of just wanted to leave it open. We're just coming off of a 3-day holiday weekend, Memorial Day weekend. I hope everyone had a good Memorial Day. And the markets have been, for the most part, a little subdued today, although we are seeing a bit of a pullback currently. By the way, if you have specific questions just for me that you don't want to ask in this webinar, you're always welcome to email me at kip@equity-alerts.com. I'm always happy to take your phone calls, 972-841-8886. If for some reason I don't answer, I just ask that you please leave me a message because I might be in a training session or have something be on the other line. You can also text me at that number as well. And if you leave me a message, I will get back to you. So I was thinking that if there weren't any like real specific questions today, we could just look for a trade and kind of go through the steps, go through the processes of evaluating, putting in an order, managing the trade, kind of a start to finish, if we can find something. The great thing about the Medved platform, the thing that I love about it, is it integrates with several different brokers. The main brokers being Ally Invest, E-Trade, TD Ameritrade, and Interactive Brokers. Unfortunately, they do not integrate with Fidelity or Schwab, which doesn't mean you can't use the platform. You just can't enter your trades directly through the platform if you have one of those other brokerage accounts. You can still utilize the tool to help you with your trading. You'll just have to go to their order entry, whether it's a standalone application or on their website. So are there any stocks that any of you guys might be watching right now? That we could try to find a trade? It looks like we just missed AMD. And I'm going to switch real quick. This is my two chart layout, which I use at the market before market open, just to do analysis of trends, looking at the long-term, mid-term, and short-term trends, and then seeing what the prior day movement was. Once the market's open, I go to what I call my popper dropper layout, which I right at the open, I'll use a 30-second, and then I'll switch about 20, 30 minutes into a 1 minute, and then my 3 minute, and you can't see on the other screen, there's a 5 minute. The 5 I use more for drawing 5:15 for drawing Fibonacci, or just looking at the 5 minute down arrow for a confirmation of a trend reversal. So let me see if I can find something that's maybe, boy, that would have been a good short. I had a nice little, the last trade here was not bad. I wish I was still in it. It kind of bounced up and I missed the rollover on AMD. One second. Let's see what C's is doing. So as part of the evaluation, I look at, what it's been doing throughout the day. I look at where it is in relation to the 3 minute Bollingers, and obviously I'm looking for down arrows if I'm going to short, up arrows if I'm going to go long, confirmation of a trend reversal. Foot Locker might be an end of the day bounce here. We've got what looks like good support on the 1 and 3 minute. And even the 5 minute is building a good candle. So let me do this real quick. I'm going to, just so y'all can see, I'm going to go to a 15-minute time frame. So I can draw the first 15-minute Fibonacci extensions. We go back to the 3. So interestingly, we are on some support here at the 300% fib level. You can see that line where we've kind of been bouncing along it. We're not at any pivots currently on either one of these time frames. So we don't have what I would call tremendous amount of support. I would call this a riskier trade at this level. But if the market catches a little bounce, then that might end up being a decent end of day trade. So while we're waiting, we'll keep an eye on that one. Let me see if I can find one more real quick that's down that might be on some support. And then I'm going to answer a question from Bruce. I know TEVA was just getting hammered today. It is looking like it's on a little bit of intraday support right now, potentially. Whoops. So when you go to draw the first 15 minute, if it's extended beyond that, then what you'll have to do is clear that out and then next try a first 30 minute. And so the 30 minute does work. And you can actually see where we bounced off the 3618 of the first 30 minute. We went up to the 2618 and we're now kind of right around or just below the 300. Actually, it's rolling back down. So we may want to look for a retest of the 3618 as a potential bounce off area. It also looks like Foot Locker is rolling back down currently. So for right now, we'll just keep an eye on these. We may or may not get that opportunity today, especially if the market accelerates its sell-off into the close. All right, so Bruce says, I see in the MT scanner bid size and ask size. How can you use this info to your advantage? So let me go into, well, let me open, let's do it this way. I'm going to go open a portfolio. I'm going to use my NASDAQ 100 portfolio. And then we'll open up the scanner. So in the MD bid size, ask size, how can you use? So which scan were you using to see this? Or were you using one of the other? Oh, you know what I need to do? Hold on. I probably need to change the view to the standard grid. Were you looking at the standard grid? And then you have your bid and ask size. I don't really know, honestly, Bruce. I'm not sure how helpful that is going to be. I mean, that information changes so rapidly. And when you're just watching one order, I mean, at a time, I don't feel that this is really anything to help. What you would want to do is you would want to, and let me close this. What you really want, if you're into that, what you're going to want to do is probably watch either level 2. Then you can see the order flow on, the volume. I wonder if you can add. So you see how much is on the bid and on the ask. I've never been one to read into level 2 to order flow. I know there are some people that love to kind of read the tape, so to speak. You could also, I think, look at the depth of market. That's another one that shows the buys and sells at different levels. But I've never really been, and then there's also a depth chart. I've never really been one to read level 2 and try to figure out, bid ask size, because what has happened is that with electronic trading, with all these algorithms, there are a lot of orders that get thrown out there at different levels and different sizes. Oops, okay, hold on. We're starting to get a bounce on Foot Locker. We've got a 1 minute, 3 minute up arrow. Okay, and we're coming back through that 300. So let's put in a small long here off the bounce. We're coming right into the mid Bollinger Band. All right, so long 42.76. Now it's bumped up a couple times through here, and the last time and failed, but it got up a little higher. I like the triple bottom here. So as far as risk to reward, let's figure out what our possibilities are. Now we've got volume weighted average price way up, 43.80, like $1 plus higher. The odds that it's going to actually get up there, I don't know. I mean, with less than 45 minutes to go in the trading day, it would take a miracle to get there. So I'm going to say odds are it probably won't get there. Now, I have to look and see what are some realistic levels it could get to. So right here, this 43.20, which is the 200, that's a possibility. You also have what looks like a Fibonacci support level right below it. So if I was to put in a target, I would say right around 43.20, and then of course 43 and a quarter, is the quarter. So for those that like to follow the idea that stocks tend to move in 25-cent increments, that would give us about a 50-cent move. Our risk is not horrible here because really all you have to do is look at the low of the day and probably just go just below the low. The low of the day is 42.65. So it's only 11 cents below where we got in. So we'll set and I'm going to use a bracket order because that's what I like to use. I'm going to set a sell bracket order. I'm going to go with my stop at 42.61, 15 cents. And I'm going to go with my limit at 43.21, which is pretty much right on Fibonacci support 1. So the thing I love about the Medved platform is that when you set a bracket order, it lets you know what your risk to reward is in dollars. So I'm risking a loss of 75 to make 2 1/4. That's pretty good. That's pretty much a 1 to 3 risk to reward. I'm risking $1 to make $3, basically. So I transmit the order. It's now set. And then as the market, as the stock moves, if it continues to move higher, which it's already started to move, then I can at least inch up the stop loss, and then hopefully to a point where I can get to break even. I like to try to find trades where I can average 1 to 1.5 or better for risk reward. So it doesn't necessarily mean every trade has to be 1 to 1.5. It just means that the average needs to come out right around 1 to 1.5. In other words, I may have some trades that are 1 to 2 risk to reward. I might risk 100 to make 200. I might have some that I might risk 100 to make 250, 1 to 2.5. I might have some that I only risk 100 to make 100, 1 to 1. You don't want a lot of those trades. You can have a couple of them as long as you also have a counterbalance of the 1 to 2s or 1 to 3s. If you're looking at getting into a trade and you're seeing, maybe not everything is lined up, not all the stars have lined up, so to speak. You're on some support, but maybe not at a fib level. You don't have big confluence where you're at. It looks decent because maybe you're on a bottom, but it's not the ideal trade. There's a higher level of risk in that trade, okay? Because really that's all we're doing is risk management. We're looking at charts and indicators. We're making an evaluation of risk. And then we're looking for some level of reward based on the risk that we're going to take. If it's what I consider a higher risk trade, and I think Foot Locker is probably a little riskier in the sense that the trend today has been down, so that's a higher risk. The market has sold off, so that's a negative. Okay, so we've got added risk. The positive is that, okay, so we found support at a Fibonacci level, pretty much at the 300 of the first 15-minute level, or whatever it was, the first 30. We found some good support. We see that there was a triple bottom. That's a bonus. But beyond that, there's not a lot of confluence. There's not other pivots, other levels. I mean, we did get 2 up arrows on the 1 and 3 minute on the clear lines. So the clear lines, but of course, you can see where you got an up arrow followed by down, up. So it's been very range bound. That's a negative. It's caught in a sideways channel is what it's doing. Now that sideways channel is technically a support level, but ultimately one of two things are going to end up happening. It's either going to break up and run higher and true support has been found, or it's going to roll over and break through the lows and support caves in and breaks. I mean, we don't know. We can't predict the future. What we can do is evaluate risk, reward, look at what we see in our indicators, and make an educated decision based on that, whether to take the trade or not, based on your personal risk tolerance, based on other factors that you may put into your plan. So, I mean, ultimately, you have to make a decision when you're looking at a stock and you're looking at the indicators. You have to make that decision. Does this meet my criteria or not? If it doesn't meet your criteria, then you don't take the trade. If it's close to your criteria and you deem it a riskier trade, which you can take, then I always want to know that there's a higher reward. Riskier trade, there better be a higher reward. I don't want to take a 1-to-1 risk to reward trade or a 1-to-1.5 risk to reward trade if I have a higher level of risk than my normal trades. If it's a little out of my comfort zone risk-wise, if there's things that are like, the market selling off and I'm fighting the trend of the day, there better be a darn good reward at the end of that trade. And thankfully on Foot Locker, I mean, the reward potential is pretty good, potentially. It may or may not happen, but there is potential. The potential is, I think, at least getting to, I mean, if we catch some momentum back to the upside, I think it could get to this 43, 20, 21 level, because you've got Fibonacci support there. You're on the 200 fib level of the first, whatever it was, 15 or 30 minute that I did. So it could get there. Now, does it have to get through some other levels? It's got to get through the top of the Bollinger Band. But notice what the bands are doing right now. Notice that the bands are tightening up. You know, so look at this. When the bands tighten, there's usually followed by a move, right? A bigger move. So when you get into these tight ranges right here, now that was followed by a big move down. We tightened up on the band, and guess what we're doing? We're bouncing. So typically, when you see this move, it's followed by either a bounce up or bounce down. And thankfully, we're catching a bounce. Now, once we get up 10 or 15 cents, we can move our stop to break even, or 1 or 2 pennies in profit to cover commissions. And then you've got virtually, I'll say it, a risk-free trade. There's always some risk that something negative or catastrophic could happen when you trade. The catastrophic things that could happen is, albeit rare, there could be some very negative news in the middle of the day that comes out, and the stock either halts pending news, or in a blink of an eye, it drops dramatically and blows right through your stop, and you get stopped out 20 or 30 cents lower. That's the unknown risk that could happen, but rarely does happen, right, in trading. There's always that element, the element of surprise that, you know, the CEO could all of a sudden decide to retire, and they halt the stock pending that news, and then you're kind of screwed, so to speak. But I call those lower risk, because those typically, I mean, the odds of that, especially on a stock like a Foot Locker and a you know, a Dow component, an S&P component, a NASDAQ 100 stock, where you're going to see that more often is going to be on a biopharmaceutical, biotech stock, on a thinly traded, unknown stock. Those are the things that can happen on more often, you know, to stocks like that. It happens a lot less on stocks like this, but it is one of those things in the back of your mind. You always have to remember that could happen. Okay, you could get caught in one of those. So there's no such thing as a risk-free trade. There's a lower risk trade, or, you know, we call it basically put yourself on the free ride once you're stopped in profit. But there's still that element that could happen. Any questions for me right now about what we're discussing? So I still am not feeling 100% confident in this, but I'm feeling better. I mean, it's moving in our direction. We've got profit, not a lot, $35. Oh, we're starting. Yeah, here we go. We're hitting the top of the band right now. We need to see that expansion of the band so we can get a push higher. We definitely have the clear lines looking good. You know, we've got, let's see, did we get a 5-minute arrow yet? So we actually had an up arrow on the 5-minute a little while back. We already had that. So we had a 5-minute. We just got a 15-minute arrow. It's not committed yet, but we have a cross on the 15. And we already had our 3-minute. That was right before we entered the trade. We got the lock on the 3-minute. Now we just need a little, I think a bounce in the market overall would probably assist us. And actually, we're not getting that. We're actually getting a sell-off. We're down 150 on the Dow. So that's not good. You know, an acceleration in the overall market will probably drag on this trade. You can always choose to exit with a small profit when you see something like that, especially, you know, it got to the top of the band and wasn't able to push through it. We couldn't get to the 2618. So I could take the $25 here and say, okay, well, you know, there's less than 30 minutes to go in the trading day. It's not looking as great as I thought it was going to be. And rather than take a loss, at least I make a little something. I cover commissions and put a couple of bucks in my pocket. Sometimes you have to do that. Sometimes you have to make that decision. There is a button that I love that they've added to the Medved platform. It's called Flatten. It basically exits the position and cancels any open orders. So I'm going to utilize that here just to show you, because I mean, I definitely don't think we're getting to 43.20, and we might get to the 2618, but you know, we're fighting the trend of the market. If I can put $25 in my pocket and call it a little nice little afternoon trade, that's okay. So that's what I'm going to do. I'm going to hit the flatten button, and we got filled at 42.81. So made a nickel. Nothing to write home about, but at least it wasn't a loss. I made the decision based on the fact that, you know, we're seeing an acceleration down. Of course, now it jumps another couple of pennies, but that's okay. You know, you have to make these decisions, especially if you've been in a trade more than 15 minutes. I don't know if we were quite in there 15 minutes, but once you've been in a trade 15 minutes or so, and if it hasn't really quite done, God, look at that. Now it runs. I push the button and then it rips. I got kippered. That's the new term, getting kippered. But that's okay. I still made money. It got to the 2618. Dow is continuing to push lower, so I'm okay with that. I look at it this way, $25 is better than nothing. $25 is better than losing. $25 is better than a flat trade. Wow, look at that. It hit that 2618 and then it just shot right back down. So I'm good with that. And you have to be willing to sometimes take less than you wanted. Again, it was still ended up being a winning trade. There are some days where you got to realize it's all about the kibbles and bits, as we call them. Okay, so let's see if we can. I mean, it's hard finding trades at this time of the day. I'm typically not looking at right at the end of the day. TEVA is trying to catch a little bounce. You got a 1 and 3 minute up arrow. You're bouncing off the bottom band. So let's do the same thing on TEVA. I'm only going to do 500 because again, I'm feeling that it's a riskier trade here. Whoops. All right, so 9:45. I've got my long entry on TEVA, and I'm not going to look for a lot here. I'm going to let's see. I'm going to risk $40 to make 80 because my stop is below this current low. It's not below the low of the day because I'm not willing to risk that much. And my limit is right up at the upper band, which it could jump up that much. So it's a 1 to 2 risk to reward. Hey, Bruce, take care. Thanks, buddy. The only thought I had on this, I mean, obviously we've got a 3 minute that's flickering. It hadn't locked in yet. I thought it had locked in. I wasn't paying. We had a 1 minute up arrow, which isn't enough. The 3 I didn't realize hadn't locked in. The only thought I had on this was that it's down pretty big today, 13%. And there might be some end of day bargain shoppers coming in and some shorts that are covering from the morning. And of course, when shorts cover, that creates buying. They have to buy to cover. So I'm thinking that's what this move was right here. This was probably some short covering. It might have been some, from the morning session. This was probably short covering. It might have been also a little bit of bargain shopping. And then you're going to get the element of those that were long within the last week or two that are going to kind of panic and buy because it's down so much today. They're going to average down their position. They're going to say, okay, it's the end of the day. It looks like it hit a bottom. It's starting to bounce. I'm going to add in. So the combination of those three, the short covering, the quote panic buyers or the averagers down, and the bargain end of day bargain shoppers could create a quick 15 or 20 cent bounce. And that's all I'm looking for. I'm just looking to catch a little piece of that little end of the day pop. And we know this last move did take it up to the upper 960s. So that is a realistic level. And you've got the top of the Bollinger Band right at 960. So there's a good chance it could get through there. But again, we're getting into the last less than 30 minutes to go in the trading day. Again, my least favorite time of the day to trade, and the markets are hitting lows. The Dow's down 200 points. So again, we've got a little riskier trade, but the reward is reasonable. We risk 1 to make 2. We risk 40 to make 80. It's acceptable. It's a smaller position, right? I mean, normally on a $9 stock, I would be looking at 1,000 or 2,000 shares. But um, um, in an instance like this, I'd rather just go with a much smaller position and not risk much money. So we'll continue to watch here. We have a little over 15 minutes to go in the trading day. It's still, I like the fact that it is still trying to bounce in light of the collapse we've seen in equities today. Are there any questions at this point? Anybody have any questions? So we had a couple of additional people pop in here in the last few minutes. For those of you that just popped in, we just spent today kind of evaluating a couple stocks, showing how what I look for and how I manage trades using bracket orders and using the indicators that I follow, which include obviously my clear line indicator, the daily pivots, the DMARC pivots, as well as the Fibonacci pivots, and then also volume weighted average price, parabolic stop and reverse on a 1 minute, and then the first 15-minute Fibonacci extensions. And then we spent time discussing risk to reward and that's kind of how we do things. So what ends up happening when I get in towards the last few minutes of the trading day, if I get into something and it's not doing what I expected, sometimes I'll just close it out. Kind of like the Foot Locker trade, you know. So that Foot Locker trade I just noticed, hold on. It rolled back down. So look where it went. It actually got right to that fib level, that 2618, and then reversed and then broke down. So we were smart. We were very smart to grab our profits on Foot Locker, albeit they were not big profits, but is better than getting stopped out, which would have happened had we let it roll over. It probably would have hit our stop. Actually, I think our stop was a little bit below that, but yeah, it would have hit our stop. I think it was at, no, it was at 61. It wouldn't have hit it, but still. So TEVA, we're basically sitting back at break even. It's not really pushing enough here. I'm going to wait maybe another minute or so. If it doesn't start to move, then I will probably just close it out. Just because, the markets are pushing their lows, and we've been in it a few minutes, and it's not really doing what we thought it was going to do. Again, that's part of the whole, when you see something, when you're trading and you see something that gets you to want to enter a position, whether you go long or short it, whatever that is that got you in, if it doesn't follow through, then it's most likely going to be a failed trade. So sometimes you do want to end up closing it out if you can close it flat, if it didn't do what you thought it was going to do. So it's trying to make one more quick push here. If it doesn't get back above our break-even point, then I'm just going to take the tiny little penny loss or 2-cent loss and move on and say, okay, it's the end of the day. We're not going to get a push into the close. It might. Oh, it's starting. I want one more little push right into the close. I'm getting impatient. All right, I'm out flat. I just called a flat trade. That's all right. I think we had the market against us today, trying to go long at the end here. And the fact that, there's only a little over 10 minutes to go in the trading day. But we had 2 trades. One gave us a nickel. The other one gave us 0. Trying to go long on a negative day at the end of the day is not a horrible thing. I would have liked to have seen a bigger move, but that's okay. Any questions? Anybody have any questions? We'll sit here and watch, see if it looks like TEVA still is trying to bounce a little bit. I just wasn't feeling it, so it was best just to exit and move on. But it's at the center Bollinger right now. If it gets through here, it may actually make it up by the end of the day to the top of the band. It's pushing. Yeah, it's at 950. So at least my analysis was accurate. I just bailed out a little soon. We are getting a bounce right at the end of the day in the S&P. I'm watching on another screen. I do tend to keep an eye on S&P futures. All right, so we've cleared the center line to the band. So the next step is probably to hit that upper Bollinger. I do like to follow the 3-minute Bollinger. So if you are interested in learning more about the clear lines, you're welcome to send me an email, kip@equity-alerts.com. Look at it. Look at it run. Golly. Why did I bail out? Oh, man. It's going to get there. It's going to get to my target. It's running. Top of the band. There it is. Should have trusted it. Look at that. Went right to the top of the band. 956. Hit it and came down. This is a great indicator for helping you find targets. Yep. I mean, literally just touched it and then reversed. Sorry, guys. That's my CJ. Foot Locker just bounced. Foot Locker just caught a. So had we been watching Foot Locker again, you know, it just caught another bounce off that bottom. But I don't like doing trades literally within the last 10 minutes of the day. And TEVA is retesting the upper band. I'd be curious if it would have gotten up to the 960, 961 level, because that's what I was originally looking at as a target. It's gonna be close. It will be very close if it gets there. Oh, there it goes. Here goes the push right up to my target. Wow. Missed it by a couple pennies. Still pushing. That turned out to be a good one. And that would have been about a 1.5% return. All right, guys, looks like we're going to wind down here. I want to thank you for tuning in today. Again, if you have questions for me, you can send an email to kip@equity-alerts.com or give me a call, 972-841-8886. And I want to thank you all for attending. I will be back on Thursday for another session, 3 o'clock Eastern. This is a twice weekly, Tuesdays and Thursdays every week. Thank you for tuning in and have a great evening. I'll see a couple of you guys in the morning. Thank you. Bye-bye.